Now with dumb money concepts, you only need to know one thing, and it's how price reacts to the levels of the candle bodies. That's pretty much it. There's some more nuances to it. Dumb money concepts, it is so dumb that you only need to know the one thing and your grandma could do it, of course. Smart money concepts are much too complicated and they make it more difficult to trade than you need to trade. The idea of dumb money concepts really stemmed from all of the concepts that already exist in the market, but we're simplifying it so it's much easier for you to trade, okay? And the only thing that really matters to the algorithms and the hedge funds and the big players in the market is what are these significant levels, how does the price react to them, and then the algorithms come and step in based off of what happens. So for an example, we have a simple swing low here, right? And the price closes beyond it. All we do is we retest that level before continuing to the downside. This is something that you've heard many times before, but we're gonna make it a little bit more simpler as we go along. With dumb money concepts, all you need to know is what happens next, because that's how we're gonna take our trades, okay? We can start analyzing dumb money concepts pretty easily. Let's start a little bit sooner and say there are levels at the candle bodies all everywhere. I'm gonna put some levels everywhere. And these levels exist for all time frames, and they're always going to exist, and we're gonna watch and see how price reacts to them as price continues through a trend. So how we determined our trend reversal here, we were going in an uptrend. How we determined the trend reversal was we attempted to make a low here, and we failed to make that low. And all of these levels that I've just drawn failed to close beyond, which means that the price is then going to go to the other direction. We can only do two things. We can either go up or down. And we are now retesting every level that we were creating on the down move. So here's a level, they front run it just barely, right? This is a zone that we'd then want to be entering in on if we did want to get short and continue the downside. We then close a couple more candles. Our trend is still to the downside, probably on the higher time frame, right? So we don't necessarily want to accept that these candles are closing to the upside, making the trend positive. After we see continuation again to the downside, there's that retest once again, and then breaks of these levels, and then we see more continuation. And as we continue to see breaks of those levels, we know that the trend is continuing, and that's all we need to be following along for right now. In the case that the trend starts to break back up in this area, that's when we want to start to question potentially that trend might be going somewhere else. But what you can do is you can look at the higher time frames and we can determine where are these candles closing. And once again, this is where things are going to really start to make sense, is that candle closed really bearishly. So that was simply a retest of this zone. As we go down to the lower time frame, we can prove that this was not a reversal, but rather a retest on the higher time frame before continuing to the downside. And that is all we need to start for dumb money concepts, guys, is trend continuation and making sure that we are closing those candle bodies beyond new levels so that we can continue that trend. Now, in the case that this trend ends and we're still seeing that those higher time frames are quite strong, so we're going to be looking for levels to enter short once again as this continues to the downside. So this does not matter too much yet until we see the higher time frame closes to the other direction. That's everything for our first lesson, guys.